You're listening to the Practical Wealth Show with Curtis May, putting you in the driver's seat to control your finances. Let's start the Practical Wealth talk about alternatives to Wall Street.
All right. Hello, everybody, and welcome to another edition of the Practical Wealth Show. Again, I want to thank you guys for listening and sharing the show. This is Curtis May, your prosperity economics advisor and money for life guide. And what I wanted to do today is we're going to talk about the 9 things to consider before lending money to friends and family. So, and it's funny because I've got a couple of people that owe me money that's really annoying me. And but they're just stories that come up. And it was funny. I was teaching a class, and I'll share a story with you. One of the things I was sharing was that, when we're talking about banks. So when banks loan money, they they see if you work, they want to do a credit report, they take you through all these things. And so if you loan money, I told them, you have to kind of do the same thing. So when my family was in the bar business, one time we had this event, and this guy I knew, but I really hadn't seen him, and I didn't know him that well. I was like, hey, Kurt, man, can you loan me $20? Okay. I'm good for it, right? Well, let's see. I haven't seen your bud in 3 years. So this is my instant credit check, okay? I haven't seen you in 3 years. I don't know you. You need $20, which tells me you're not working. So what's the first thing that a bank wants to know? Can you pay me back? Do you have the ability to pay? You don't, okay? And I'm good for it, right? No, I don't know you're good for it because I don't know your character, and I haven't seen you, and I probably won't see you again. So guess what? His loan was denied, right? And it was like, oh man, I wish I could. I can't even pay attention right now, right? So loan denied. And so you have to, unless it's a gift. Now, if I wanted to give him $20, that's a different thing. All right. But, so when you're loaning money out, people are, it's holidays are coming up, and it's things that happen. People, sometimes they come into money. Unfortunately, I had a few people pass away, and I'm in the insurance business, so I've got death claims, and, people will come at you with all kinds of crazy ideas and ways to spend your money. And I tell people, look, you ain't rich. You just got a good head start. So you either vet them, or you bring them to me, or tell them your financial advisor said that's not a good idea, and I'll be the bad guy. I'm fine with that. All right. So let's look at, if you're going to do it, things to consider before lending money. So let's get into it. So should you loan money to a family or friend? It's complicated, right? While it's natural to want to help people in your life, loaning money has potential to destroy relationships. Okay, I know people that aren't speaking behind money issues, and so refusing to lend money can be hard in a relationship too. So there's really no easy answers, right? And so you want to think about loaning money to family and friends. And so this is interesting because part of what we teach in the Money for Life program, and so I always reference to go back to the interview I did with Jeffrey Reeves in the Money for Life book, because what I want to teach you guys is to have a money operating system. So you have a framework to make financial decisions. So what's the Money for Life formula? Earn it, bank it. No, get money, which is earn it, sell something, grow your business. So we're going to spend a lot of time on the get money part. So I'm going to start interviewing entrepreneurs. I had a great interview with Desiree Stafford last week, where we talked about, stop playing small. All that is dealing with getting money, right? Because I can't steer a parked car, right? You got to bank it, which means save 10 to 20%, borrow it, spend it on what? Depreciating assets or appreciating assets. If you want to buy Bitcoin, all right. I think it's speculating, but it may work out. We're going to do an interview on that soon. But borrow against your bank, your policy, insurance policy, put in a account that you buy that stuff with, or Forex, and then out of your profits, pay yourself back. So now you have your money back and you have this asset that's appreciating. So you buy it for appreciating assets. Don't just speculate with money you can't afford to lose. Now, I've had people use the money for life strategy to loan money to other people. Okay. And so let's start with that. So I'm gonna go into a story about that. But here's the first thing. So when you are think about loaning money, first of all, only loan money on what you can afford to lose. Okay, because the grim reality is that you may never see the money again. And so if you're loaning money you can't lose, that hurts, right? And even the most responsible friends can default. Stuff happens. And so because if they're in that situation, that's a problem in and of itself. So be prepared to lose it. Be prepared to not have any hard feelings. So if it's your last $100, or if you can't stand to lose it, then don't loan it. That loan is denied, because you may have it, but if you have it, you really don't have. If you got somebody loans you for $1,000 and you have $1,000, but your mortgage is due, and that is for your mortgage payment. Even though you might be in your account, you don't have it. Okay, and so you can't loan it. I don't care what their situation. Everybody's got a sob story, and you just can't do that. So so the first thing is, don't loan what you can't afford to lose. Secondly, offer to help instead of money. See, a lot of times, I had a cousin, big cousin, and people were always coming at him with money. He was pretty successful, but I and he's loaned me money, but I paid him back, right? But what I wanted to do is, I would go see him because I needed to think differently. So because loaning money only delays a problem. So I needed to solve the root cause, which was my thinking. Because here's what I'm faced with. And I know this is more famous in the tavern business, and he had one. So I would go to him to help me think my way out of the problem, right? And so again, a lot of times, I remember Art Williams, a mentor from a company I was in, he used to say, "Listen, don't loan money." Like, it was a sales business. Was, don't loan money to your people. All right, you did your sales force, your downline, he called it, and because all it does is delay a problem. Okay. And at some point, they've got to get to the root cause of that. So whatever leads to the financial hardship, if you just loan them money, you're like putting, Band-Aid on a bullet wound. I mean, you haven't solved the problem. And most personal loans aren't repaid, and hard feelings are the result of that. All right. And so, here's what you could do. Offer, why are they broke? If they're working, offer to help them make a budget, help them find employment, give them advice, you know, and keep your checkbook in your pocket. That's not because you haven't helped them. All you did was delay the inevitable. All right. I had a client, and this person asked me about loaning money to a friend of theirs. So I said, all right, well, let's think about this. What happens if they default? How do you protect yourself? How do and so I had her put it in writing. Okay. And spell out the terms, the repayment details, and have her sign something, so that you got, if it's a big amount, you need to get a lawyer and draft up a final agreement. I had one of my clients who uses our insurance strategy, the banking strategy. This person was getting payday loans at some obscene amount of money. She says, "Well, listen, you're doing that. I'll loan you the money." What did she charge her? Like 12%. At 12 or 15%, something. It was cheaper than what he was spending. It was a better loan over 3 months. But she told him, "Listen, if you default, I'm taking your butt to court." So, and she wrote it up, and she's been able to do that 3 times, And so when she borrowed against her insurance, she's getting money at less than 5%, 4.76%, and you can loan money out for 12. Guess what? You've got to start. See, one of the things we teach is you got to learn to think like the bank. Banks loan money, and so you're not even loaning your money, you're loaning your insurance company money. So that's ultimate leverage. So, but that's another story. All right. And it's not really another story. So you want to think, but you got to put it in writing. Okay. Consider number 4, So number three is putting it right. Number four is consider how the rest of your family and friends might react. See, have you turned down others for loans in the past? What will the people think if you're willing to loan money to someone else? Will your loan be viewed as enabling bad behavior, such as poor spending habits or refusal to get a job? Okay, you've got your favorites, and they're great, but they just won't get themselves together. They just go from one disaster to another. I've got a lot of parents start. I'm thinking about somebody in particular, just enable him, able body, 30-year-old, just can't, college degree, and just would just go from one disaster to another, and you're making their car payment, you're loaning money for this and that, and to your detriment, because I knew for a fact they really didn't have that to do. I'm like, look, he's grown. At some point, he's got to pull his own little red wagon, because you're going to get to a point where, survival has to kick in, and, you're going to figure out how to solve it, or are you going to starve to death? I mean, I'm sorry, but the that's a bit harsh. I know. I was touched to seventh graders, and I was I said something like that to him because, man, you're harsh. I was like, yes, I'm harsh because the world is harsh. So you need to understand uh, that you've got to figure out how to solve your problems. You need to cooperate with other people. So it's not a dog eat dog thing, but you need to be responsible, um, and be a man or be a woman. So consider how the rest of your friends and family will react. Number five, stick to cash. Avoid consign. Do not let people put money on your credit card. Okay. Take a loan out that you loan out to somebody else. I'm not even a big fan of letting somebody buy cars in their boyfriend's or girlfriend's name, because if they don't have the wherewithal to kind of do that, why are you dating them? Okay, y'all have to be equally yoked. That's a whole other subject, But I run into I have a lot of women clients. I'm like, listen, you can do bad by yourself. You don't need to be carrying somebody. So, what will you do if they default? Okay, will you ask for collateral? Are you willing to take the borrower to court? If you start loaning somebody, $1,000, $1,500, a few $1,000s, hello, I need my money. And are you willing to take them to court? Will it end your relationship? Because people um, will borrow money from you, and they'll get an attitude. Yeah, man, I know you money. What? And that's my North Philly coming out. But and they want to get an attitude, and they owe you money. Number seven, charge them interest. I had my clients say, listen, you got to charge interest, because when people pay, they pay attention, because see, money's not free. There is a cost to cash. Okay, money has a cost, because see, here's the thing: what we always say, you finance everything you buy. You're either paying interest, use somebody else's money, or you're giving up interest that you could be earning when you give it away or you spend it, right? So you're financing everything. So if you give them money, interest is the fair wage of money at work. Okay, that's what interest is. Okay, and so because you're renting, it's rental. They call it in the Bible. And it's the parable of the talents. The one that buried his talents says, at least, man, you should at least put it in the bank so I can get interest on it. It's not in that language, but that's basically what he said. And so you've got to put your money to work. And so what happens is the situation feels more formal and serious if interest is charged. You'll also feel better about your money working for you and not just sitting there. So charging interest can avoid being charged with a gift tax. So talk to your tax professional about that one, right? Talk to your partners. You don't, especially if it's a little bit and you can deal with it. But if it's a sum of money you're going into the family, I don't care if it's your brother or whatever you're loaning money. Y'all have to discuss it. Hey, listen, so and so is having a challenge. Do we want to help them? Can we afford to help them? That needs to be a discussion. Um, and if y'all not in both agreement, then again, that loan is denied. All right, because people have different opinions about loaning money to family members, and the last thing you want to do is create friction at home. straining your finances and your relationship. Number 9, you have to be able to say no. See, you have a good idea whether or not the borrower is ever going to pay you back. So what's a credit report? Credit report is, for example, is a report of, has anybody loaned you money and did you pay them back? Well, you know this person. You know that they're in and out of work, okay, or they're one disaster to another, and it could be a legitimate situation, and you know they have good earning potential, and they always come back on their feet, right? So if they're a producer, all right, I might be more comfortable to loan them money, especially if they can show me a game plan of how they're going to work themselves out of that situation, or help them, show them, if you're going to loan them money, you need to sit down with them and look at their budget and, okay, look, here's how you're going to pay me, and so you can help them get their stuff together, going back to offering help, okay, so that you make sure you get paid. But sometimes you got to say no, okay, and there are times when saying no is the only reasonable course of action. It's just not, you don't have it. If you have it, it will be a strain. If you know it's too much to be a gift, um, and it would really piss you off if it didn't pay you back. So it's better to just say, look, man, I would love to help you, but I really can't help you right now. I'm sorry. Okay. And so you can play it off. I mean, you don't have to say, no, you're a deadbeat and I'm not loaning you any money unless they already owe you money. But then it's the old saying, fool me once, shame on you. Fool me twice, shame on me. So, you have to follow your gut. So as we close, the decision to lend money to a friend or family member is a personal one, right? Financial experts have a wide range of opinions on the subject. Avoid lending money you can't afford to lose is kind of what I'll leave you with, because you can always, always, always offer help in other ways. And consider the ramifications of loaning to somebody well. The potential ruin to ruin a relationship always exists. And so for the best outcomes, always tread carefully and make the wisest decision that you can. And so, actually, I have outlined this. I will post in the show notes, but, you know, folks, just be a good steward of your money. Be helpful. If like I said, if you can't afford to, just give it to them. If they give it back, great. But in your mind, make it a gift, and that way you won't be harboring every time you see them, you want to punch them in the mouth because they owe you money. They know you owe you money, and then you go around, you see them buying other stuff with the money they should be giving you, right? So don't be upset, right? And so, listen. So we have a few cool interviews coming up. This is on my mind because I had a couple of questions around this. So I wanted to share this. Listen, if you'd like a free strategy session in the show notes, first of all, I'd like you to get our ebook written by Kim Butler, my mentor. Financial planning has failed, and why she let her CFO, her certified financial planning designation, go. I had somebody on my email list called me. Hey, called me and says, listen, I need a CFP. And really, okay. Well, I know a couple things about financial stuff. What's the problem? Well, let's talk about it for you pay somebody, because most time it's not really that complicated, and they're great, but it's just a certain worldview that comes with that, where everything runs through Wall Street. I think most wealth is lost by how people manage cash flow. So we tend to focus on that, and if you get that under control, a lot of other things will fall in line. Another thing that we're going to go into this year is we're going to start talking about income shifting and how to properly fill out your W-4. So if you'd like to know how to do that, and how would you be allowed to be able to put an extra $200 to $300, $500 a month back in your pay, starting like next paycheck, then send an email to Practical Wealth at officevp.com or to kurtmay@gmail.com, and I will send you a little lesson on how to find what I call the fortune that is hidden in your salary, and how to free up money so that you have money to begin to save and eliminate debt. We call the strategy income shifting. And we're going to start that strategy with how to properly fill out your W-4. So with that, folks, I want you to have a fantastic rest of your day. Thank you for listening. Be sure to share, subscribe. We're on iTunes. If you like the show, please leave us a comment. And again, feel free to reach out, download in the show notes the free ebook. Also, if you like a complimentary strategy session where we can look at income shifting and how we can put more money in your pocket, we can walk you through a little 10-minute drill we do called Retirement Ready or Not to see if, hey, are you ready? Even though we don't believe in retirement, but you want to be able to do what you want to do instead of what you have to. But let's figure out where you are on that so that we can help you get where you need to be at. So great, folks. Have a great day. And we will talk to you soon. Thanks for listening to the Practical Wealth Show. Goodbye.
Thanks for listening to Practical Wealth. To access the show notes and resources, go to practicalwealthshow.com. To get your questions on the show, go to practicalwealthshow.com. This show is for entertainment purposes only. Before you make any investment decisions, consult a professional. This show is copyrighted by Practical Wealth. Written permission must be granted before syndication or rebroadcasting.